Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, September 22nd, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Before we get started, I'd like to extend a giant middle finger to anybody out there that's decided they think it's fun to use the anonymous Contact Us feature on our website to send us troll emails. Get a life, okay? Doesn't bother us. Yeah, I'm addressing it. You probably think I shouldn't, but really I don't care, and it just makes you look petty. We're happy about what we do at Revere. We stand behind our record, and we've got a great team in place, and we're only going to get better going forward. So, giant middle finger. So, state of the market. We are in a correction. If you check over here, we're now unanimous as they came for the leaders today. Leaders downgraded from neutral to bearish, joining the 5 major indexes, which are all trending below their short-term 21-day exponential moving average, medium-term 50-day moving average, long-term 200-day moving average. As far as, there's really not much more to say about that. Any hope of any fledgling rally or that the market was going to go higher was certainly thwarted after Powell's speech and press conference yesterday, and reinforced by the overnight action and intraday action today, and certainly by the action in the remaining leaders. They certainly got them today. G6, this is our in-house growth proxy, down 2.78%. That tells you all you need to know about what's going on in growth land. S&P 500 down 0.8%. NASDAQ 100 down 1.23. Dow, really think you're going to see the Dow start to outperform versus the NASDAQ 100 in the environment that we're in, down only 0.35%. A lot of money flowed into medical stocks today. Mid-caps down 2.13%. Russell down 2.26%. Global diversified 60/40 stock and bond down 0.70%. In-house down 0.04% today. We were out totally out of the market by 9:45. We sold our SSO pre-market as it spiked into, as the indexes and the futures spiked into broken resistance from yesterday, which I mentioned yesterday I thought would turn, broken support. I thought it would turn into resistance, and it did. We got out there for a small loss. That's all we take here, small losses. One good trend pays for all of the small losses. I've got the math to back it if you don't believe me. So let's get into the tail of the tape, and let's get into why we do what we do here at Revere. We're going to discuss this on the podcast. It's going to be a great podcast tomorrow. Yours truly will be hosting it. We record it on Fridays during the day. It'll go out. It gets posted to YouTube and the website during the day, and then the email will go out letting everybody know on Saturday. But Ted's going to have a great segment. Michael's going to have a great segment. And I'm going to talk about something I saw today with a senior citizen going into retirement, wanting to know if she can sue her financial advisor because she lost $100,000 this year. Imagine that, not protecting the downside, something else. So that is why we do what we do here at Revere. Here's the S&P 500. We're trend followers. When the market is in an uptrend, that means when price is above the uptrending short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average, that's the green, red, and black lines respectively, we are as into the market and taking advantage of the gains as we could possibly be comfortable doing. We start to break down and go sideways. Our stops will take us out of the market. We go down a little further, we'll just get more and more defensive. And then if the market really starts to roll over, meaning the slopes of the lines of the short-term and medium-term moving averages roll over, we approach the 200-day moving average. We're getting more and more defensive. If we break the 200-day moving average, the market is no longer healthy. It's now risky. And once again, I don't just make comments to make comments. These are the numbers. The last 13 bear markets, when you're below the 200-day moving average, you are at major risk for significant losses. If you're lucky, you'll only get away with 20% losses. I consider this, what we've seen so far, down 24.5%. Right now we're down about 21.5% after the most recent rally and pullback. If we break this, which I wouldn't be surprised if we did at all, we don't predict, but the market is absolutely not healthy right now. You need 32% to get back to even from that. If it's the average of the 6 severe bear markets, let's hope this one doesn't become the 7th. Average loss 44.5%. You need 80% to get back to even. This is with the S&P 500 too. This has a beta of 1. Diversified portfolios are supposed to have a beta less than 1, but even a 60-40 stock and bond portfolio is down over 19% this year. Bonds are supposed to cushion that. They're not cushioning it this year because we're in a rising interest rate environment. So there's been nowhere to hide except for the safety of being out of the market. And we've avoided most of this carnage. We're down 7.7% this year. As I said, the S&P down 21.5%. Broke the recent lows, making new 9-week lows the last 2 days. All the moving averages are pointed down. Next level of support is in this 37.21 to 37.50-ish area. We bounced at that area today. If we break this 36.36 area, which is the recent low from the middle of June, all bets are off. So as I said, risk is high when you're under the 200-day moving average. That's why we're in cash right now. If you have any questions about this, I'd love to discuss it with you. It's a common sense approach. Don at revereasset.com or Dan at revereasset.com or phone 855-REAL-WEALTH. That's 855-732-5932. So there's your S&P 500, NASDAQ 100, the QQQ. Certainly no better. New lows today, again, below all moving averages, and you can see how relative strength has been waning over the last 8 weeks with the relative strength line pointing down. Dow Jones Industrial Average sitting on this 300 area, the diamonds. Let's go to the actual index itself. Bounced at the 30,000 level today. 29,653 is the recent low from June on there. Mid caps MDY. Again, second low, 400. We're so $16.60 above this 400 support area, which is the next low. IWM small caps and small and mid caps really underperformed today. They had been holding up, but things changed yesterday at the end of the day. Yeah, we got sucked in. We cut our losses as we always do. It's okay to be wrong. It's not okay to stay wrong. Here are small caps, and basically all the indexes look the same right now. Let's go to the tail of the tape. Put call not really elevated that much at 1.14, and the VIX is only at 27.35. This can go a lot higher, and so can this. This can go a lot lower, the fear and greed index, and that means that the indexes can go a lot lower also. Changing from a mindset of trying to make money if the bottom is in to a mindset of every bounce is a reason to get out and look for shorting opportunities. That happened yesterday into the close. It's hard to change to that mindset. That mindset is here, especially with the breakdown of the final leaders. So very clearly we're under this bear case, which we first approached in 9/13. First it was Powell, then it was CPI, then yesterday it was Powell again reinforcing the bear case. Some news, AAII, this is like the only thing that the bulls can point to right now. AAII investor sentiment bears hit 61%. That's the 5th highest reading since 1987. This is a secondary reading for a reason. Just because it's the 5th highest since 1987 doesn't mean we've bottomed. There are cases when we rallied. There are cases where we've gone a lot lower off of this, but again, it's a secondary indicator. You got to go with the action of the leading stocks and the indexes first. Notes, we've gone from 5 out of 7 down days to 6 out of 8. Yeah, that's a lot. So we don't like to short in the hole, although we did have a failed intraday breakout late in the day that ended up giving up almost 0.9% in the last 10 minutes. It was really an ugly close. So expectation coming into today was certainly negative with yesterday's breakdown, confirmed today. As far as the new support level I put in here, we bounced at that area. This is kind of a broad area, but it's the bottoms of all of the recent lows except for the final shakeout recent, and the fib at 38.15. This is very strong resistance right now. This is when I saw this this morning into this, that was, I didn't want to wait for the open. We sold our SSO little by little going into that, and that ended up being a pretty good move based on the intraday action. Intraday, little gap down, tight range all day. We were green leading into the open, faded right at the last 10-15 minutes of the open, tight range all day, nasty fade into the close. The only green that I could find today was the US dollar, and it really wasn't that up that much that it would impact the market. And XLV healthcare, relative strength in XLC. Microsoft, Google, and Meta were green today. I couldn't find any reason why, but XLC, XLP, which is staples, and XLU utility showed relative strength, even though 10 out of 11 sectors were down. Bonds down big, which means interest rates were up big. TAN, jets, cloud stocks, transports, and retail all down much worse than the indexes. So we're going to go over this focus list, which we only got 4 out of the 21 over 21 left above the 21-day exponential moving average. That tells you everything you need to know about leaders, as well as the terrible state of the G6. And bottom line, today they came for the leaders back to cash. So next, here's that support level. I've got 37.40 to 45 on here. That was the June, July support level. You could argue it's as wide as 37.15 to 52, but either way, we bounced at that level today. So let's take a look at the leaders that finally got hammered today. And we will start off with ENVX. We sold this yesterday out of caution. Pretty good sell. Lithium, LTHM, broke the 21, down 6%. CMG, we sold this 15 minutes into the open today when it made a lower low versus yesterday's first close below the 21. 4% loss on this and a 4% position, so 0.16 to the portfolio, less than the 0.2 that our maximum loss wants to be. Tesla, sold this 15 minutes into the open today, tiny loss on this. Also, it went on to go down 4% before bouncing at the 50-day moving average. Enphase finally broke today the 21, down 7%, still above the 50-day moving average. Now we'll keep our eye on which of these leaders might try to put a bottom in near the 50-day moving average if the market tries to put in a bottom. Again, we're not predicting that we're going to hell in a handbasket, but we're certainly not healthy right now, and that's just a fact. One that held up kind of okay for solar today, still down 3%, but above the 21. The wolf howled today, down 8.5%, breaking the 21. These are the piano players that finally got arrested today when they raided the House of Ill Repute. LNG, a rare positive on the day today, bounced at the 21. BJ's, less than 1%. Undercut closed right below the 21. CEG, the third stock, still holding above the 21, down 2.2% today. Shockwave, sent shockwaves through your portfolio if you were still owning that today. Closed right below the 50-day, down 9% on the day. And the last stock that is still above the 21 day is Northrop Grumman. Had a strong day today, as there's a lot of saber rattling going on by Vladimir Putin. So that's the state of the leaders, the state of the market, and it's red. And we've lost a couple small losses over the last 2 weeks, nowhere near as bad as the indexes. Our spread over the indexes year to date is close to as high as it's ever been. When we bottom, we have so much dry powder, and we'll be compounding from such a high capital base, only being down 7.8% versus being down 20, 25, 30, wherever it is that we bottom. that we're going to make new highs much quicker than the indexes will. That's our approach at Revere. It's a common sense approach to protect capital when the market is risky. Come on aboard if you haven't joined the Revere train yet. There's going to be a point to where we'll have to close GROTECTION because it'll get too big, and then we'll have to open a secondary portfolio that won't be able to buy some of the leading stocks that we have. There's already some we've had to cross off our list because of how big we've grown. Anybody in already, of course, would be grandfathered, but join us. I guarantee you that, well, I don't guarantee anything. Join us. I think you'll like what you see. We're completely transparent. Nobody puts out videos like this. Nobody discloses what they're doing, their thoughts on the market the way we do. Most advisors are just pie chart salesmen that tell you to hang in there, and they're going to get sued if they don't protect people close to retirement, their nest egg, plain and simple. So that's going to wrap it. As always, love to hear from you. There's the contact info. Going to wrap it up now. See you on the podcast tomorrow and on Friday night's video, where we won't have a 21 over 21 because it's been blown to smithereens and we shouldn't be buying stocks in this market anyway. But remember, we're only ever 4 days away from a bottom and a follow through. And if there's leadership quality stocks there, we'll be taking some dips into buying them. If they're rewarded, we'll continue to put more money to work. Nobody thought, certainly not me, that this shakeout here on 714 would lead to a double-digit gain. And that's why I never predict. Anything can happen in the market. This is extremely ugly right now. It could get uglier, or we could see a positive reversal for whatever reason. The market looks ahead. It doesn't look back. Case in point, look at the chart of Jets. Jets peaked months ago before we even opened back up for COVID. Airlines are making, yes, we've got the oil price issue, but more people are flying than ever. And look where this is. It's down 50%. The market looks ahead. So wrapping up, Thursday, September 22nd, this is Don Vandenbord reminding you it's not how much you make, it's how much you keep. Just the facts, folks. Thanks for listening and have a great day.